Welcome to the REI Foundation Podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
Hi, everybody, and welcome again to the REI Foundation Podcast with Jason and Peely. This is Multifamily Mondays, and today we have a special guest joining us, Kevin Dowling.
Hey guys, good to be back.
Welcome for being in the same room for once. All right, today we're going to talk all about our recent acquisition. We're talking, it's about 5-6 months out, but our 94 unit in Kentucky, some big news. We've just completed all of our renovation packet, including our 6-month repairs, our 12-month repairs, and we have 24 units renovated right now. And that was all able to be fast-tracked, a lot of different moving parts, including doing that with our rent raise strategy. But a lot of great progress going on.
Yeah, we're excited to have the construction done. We can start to further concentrate on the rent raises. Occupancy right now, we're excited to be at above 95%. And with the construction being done, we can now concentrate on, we're at about 30% of the units have been rent raised right now. So we can concentrate on getting the majority of those rent raised. We're down to no month-to-month leases, which is great. We have no upcoming move-outs, which is great. And what we're pretty excited about, our third-party management partner is launching a new software on January 1st for our financials. So we're excited to kind of get that as part of our arsenal in a couple weeks.
Yeah, we're having issues with the software. It wasn't working according to what we were looking to have. Basically, full access to. So this was part of something that the management company is already working with, but we preface our concerns, and we'll be part of the first rollout to have access to that program, which is going to be great. We'll knock off a lot of the back and forth, knock off a lot of the questions, and really get us down to the details we want. So huge month. Looking forward to 2018 with some new properties on the horizon, and seeing this one stabilize and moving forward, and keep getting our returns getting out to our investors.
So I actually have a question about that. This question actually comes from Stephanie in North Carolina. Stephanie asked, how are your returns looking like?
In regards to?
I'm assuming in regards to your returns to your investors, to yourselves. Like, what is that?
So we have been making our returns as quoted and as we had expected. We choose to buy properties that are currently stabilized, but we're not going into a full renovation package where we are ideally having to defer returns as we create cash flow. This property was already cash flowing; it just wasn't being managed in its best use. So what we've done here is created better uses for the property, improved part of the property, and with that, we've been able to meet our returns for our investors quarterly.
So our schedule is a quarterly return, whether it's 7-8% preferred return. We've hit those marks, and we just paid out our second quarters of return. So we're
2 months out to the third
quarter right now.
Correct. So
you must have some pretty happy investors.
Happy investors. That's what it's about. Is we are looking to create a base where we have happy investors, happy projects, and now we have happy people living at the property, which is most important. We were out in the property probably about 3 weeks ago, and just from the day we took over to now, just the whole look of the property has completely changed. Landscaping's changed, signage changed. The tenants are happy because they have repairs that were not taken care of before that are now being taken care of as they asked for them. And they're just ideally happy because it's a better place to live. We created a better community for people to live and to operate at, and that just makes the entire environment better.
Yeah, but now that we're done with our construction initiatives, we can refocus our efforts onto a marketing push to ramp up and fill up those last 5% of vacant units, which should be good.
Yeah, it was all been organic so far, which is great. It's a pretty saturated area with apartments, so a lot of our tenant base has been just coming through for a walk-in. So now we've done some other avenues onto Zillow marketing and Trulia marketing just to drive that last 5%.
Fantastic. Do you guys have anything else to add?
looking forward to 2018.
Let's do it.
Fantastic. Well, this is the REI Foundation Podcast with Jason, Peely, and Kevin. Thank you again for listening. We are so grateful.
Happy New Year.
Happy New Year. Happy holidays. Bye now.
Thanks for tuning into the REI Foundation Podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.